I don't believe in dividend investing. I will not buy a dividend stock. Welcome back to the channel, guys. My name's Darwin. If you like anything having to do with finance, tech, or technology, or mainly Tesla, please subscribe to the channel so you don't miss any future videos. So today I want to talk about dividend paying stocks. And I need to get this off my chest because the top search for categories out there are best dividend paying stock. What dividend stocks are great? I do understand where this is coming from. If you're a new investor and you want something that's more secure or you want to get paid every few months, it's a good feeling. Oh, you must feel so good. You're getting a little bit of money every month, right? It must make you feel a little bit more secure. But I'm here to share my opinion that dividend investing is actually not a great investment and it's just a waste of time in my opinion. So I'm sure people look at charts before they buy a dividend paying stock, and usually it's a pretty secure stock. It doesn't have a lot of volatility, doesn't go up and down. But let me ask you this. If you are investing in stocks, are you okay with the company not growing? Right? You're an investor. Think about it like this. You're an owner of a sports team, the Chicago Bulls, for example, and you want to go out there and dominate like it's 97. Okay? After every championship, are you just going to trade a player away just to make the NBA happy? Right? No. It's the same thing with dividend investing. Not exactly the same, but that's the best analogy I could think of. So there's a few reasons I want to give as to why I don't believe in buying stocks that pay dividends. So number one, if you're investing in a company that has a high dividend just because the stock dropped, like let's say now it's paying an 8% dividend yield because the stock has dropped in price so much. This is extremely risky because if you lose your capital due to bankruptcy or declined profit or declined cash flow, your original capital is reduced. And no matter how much dividend it pays, it doesn't make up for that. And keep in mind, there's a reason why that stock is dropping. All right, that means the market believes there's some kind of decline in revenue or something is going on. And guess what? If declines in revenue happen or declines in profit happens, guess what the company has to do? They got to cut their dividend. So the reason why you invested in the company in the first place, there's no more reason to even hold the company, and now you're at a loss. Reason number two why I don't like dividend investing is because companies that pay dividends are basically saying, I have no use for this money. Let me explain what I mean. Whenever a company pays dividends, that's money that it could have used to reinvest back into its business. But instead, they chose to pay out their shareholders. They're just basically saying, hey, we have no idea what to do with this money. We don't really want to grow the business. We have no new product lines that we can do. Let's just give it back to the shareholders and make them happy. So thinking back to the basketball analogy, is that going to make your basketball team better if you just give the money back when you can go out and acquire a superstar? Think about Golden State Warriors and Kevin Durant. They were already great, right? They were already great, and then they got Kevin Durant, all right? They're not dividend investing. They're going out full steam ahead, making their basketball team better, making their company better, making their business better. So another really big reason and third reason why I don't believe in dividend investing is that you're essentially being taxed twice. If you're the owner of this company, you get taxed at the corporate level because everything you make in profit is taxed. And then once you receive your dividend, you're taxed again. All right. So I'm the owner of the company. Why should I be taxed twice for owning the company? It just doesn't make any sense. But that's exactly what you get with dividend investing. Compare that to a company that reinvests everything they make. They don't get taxed at all because on profits, when you realize them, that's when you get taxed. But on a company like Amazon, where they haven't paid federal taxes for a while, it's because they keep reinvesting. It's not like they didn't make any money. They're making so much money. They're just putting it back into their business. When you put your profits back into your business, it's a reinvestment. That way you don't get taxed on it. So another thing about stocks with really high dividends is like the CEO, you could just tell they're catering to the shareholders. Okay, so they have no incentives to take risk or grow or innovate. And this is the ideology that I don't really like about stocks that just stay stagnant. When investing in these companies, my biggest fear for a shareholder or the owner of a company is if you don't invest, if you don't make your company better, if you don't grow, this is when another company out of nowhere is going to come in, innovate, move faster, and take your market share. And next thing you know, you're in second place when you could have been really strong because you already had that head start. Companies that reinvest everything that they have back into growing and making their business better and growing to be even bigger and making it so that no one can catch up, companies like Netflix, Amazon, Tesla, Square, Spotify. The criticism with these companies are that they're like a cash burning machine. They're a cash burning machine. There's no profit. Yes, that may be true. They're burning through cash, but they're burning through cash in order to grow. If these companies are actually growing and providing real, tangible products that people and customers enjoy, they're growing their brand. They're becoming a really strong brand. And as long as they have that cash to keep growing, even though it might not appear on the profit side of the balance sheet, they are still getting bigger and they are getting stronger. And eventually, when they stop growing, just like that, all of a sudden, they're going to have that profit hit the balance sheet. And for companies that are already paying dividends, even if they want it to change, it would be extremely difficult for them to cut the dividend and basically tell the shareholders, hey, we're going to reinvest in our business. We're not paying this dividend anymore. A lot of investors may have invested just for the dividend itself, and this will cause a lot of backlash, and the CEO's job is now in jeopardy. This is why I love Tesla as an investment, because Elon Musk, as the CEO, his incentive is tied directly to the performance of the stock. In this New York Times article, I'll link it below, Elon only gets paid if the company succeeds over the long term with significant gains in market cap. It also says he has to hold them for an additional 5 years before he is allowed to sell them. So it's an incentive for him to actually keep the share prices up and keep growing and keep taking market share and keep expanding. So in this article, mind you, it was written in January of 2018. He says, I actually see the potential of Tesla to become a $1 trillion company within a 10-year period. I bet people were laughing at that statement when he said that in 2018. It was only a $50 billion company at that time. But look at the company now. 2 years later, we're at $300 billion and growing. As opposed to that, you have Mary Barra of GM, right? This GM CEO. You think she's going to take risk with a $21 million salary, right? She gets paid no matter what. All she does is keep the shareholders happy, keep paying the dividend, and as long as people keep getting their dividend, they're not complaining. Elon Musk, if he doesn't grow the company, if he doesn't expand in the $50 billion, $100 billion, $200 billion, we just hit $300 billion. If he doesn't expand this company, he actually does not get any money. He had zero salary for a while now, right? His annual salary has been zero. So this is why I love Tesla so much, because the CEO himself has to keep innovating, right? And even after he gets those shares, he's not allowed to sell them for 5 years. The point is that companies that typically pay dividends usually don't take risk and they don't grow. You think Tesla as a company would be able to grow and add gigafactories and build and research and develop all these game-changing battery technologies, which cost millions of dollars, billions of dollars, if they paid a dividend? No way. If they paid a dividend, that money, instead of going into all this research and development and building, would just go to shareholders. They're not expanding anymore if they paid a dividend. So just for fun, let's take a look at some stocks, right? So let's see where the stock of GM and Tesla has gone in the past 5 years. Come on. Oh, come on. It's not even close. If you invested in GM, maybe you made some dividend money, but I guarantee that dividend money didn't make up for the 469% gain in Tesla stock. Keep in mind, the GM stock itself also lost principal value of 13%. And just for fun, just for kicks, I'm not even kidding around. Like I don't mean to like bash on any one company, but just for fun, let's just take a look at Ford. Okay. So let's look at another few examples. So let's look at media companies, right? So let's look at Disney, right? So Disney pays a dividend. It's always paid a dividend. Let's look at how it does against a cash burning disruptive company like Netflix. Okay. So Netflix, 376% gain for Netflix, 1.4% gain for Disney. It happens elsewhere too. Let's look at Intel versus AMD. All right, so AMD up a whopping 3,206%, while Intel only gains 110%. Both of these stocks in the tech sector is just booming and doing great. But look at the growth. So just for fun, if you want to replace AMD with NVIDIA, you could do that too. Still clearly outgrowing Intel by a wide margin. So look, I think I made my point clear, and this is just for me to get off my chest, because everybody's first choice is always, oh, what dividend stocks are there? I love to get paid every quarter, right? But that shouldn't be your mindset as a young investor. If you just got into stocks and you're looking at dividend paying stocks, like that's the wrong boat to be in. You should be looking at stocks that grow and change the world. Stocks that will grow over time, and by the time you retire or by the time you're in your mid 40s and 50s, you can take that money out and enjoy it because you were part of a revolution. You were part of a company that changed everything in society. And then when you get older in life and you want something more secure, you can go ahead and buy some bonds. That way you can't lose principal value and then you still get your dividend income. So at least in my opinion, I won't be buying any dividend paying stocks with the exception of Apple. I feel like Apple is a great company that just maximizes return all day. But even with Apple, I feel like there are better choices out there for growth. Now, with that being said, keep in mind to pick great companies. I'm not saying to buy any non-dividend paying stocks. That would be crazy. But if you do your research and you understand the company and you see that they have a path to profitability with a plan that you believe in my opinion, that stock would do better than its competitor because it's gonna disrupt them. Obviously, again, I'm just a dude on YouTube. This is not investment advice. What do I know? I just have a gain of like 305% in my overall portfolio when compared to the S&P's like 9% gain in the past year. As always, not investing advice, but if you've enjoyed this video or you learned something from this video or if changed your mind in any way, go ahead and like this video, subscribe to the channel, and please do me a favor. Let's share this video with someone who only buys dividend stocks and let them know what they're missing out on. Till next time, invest safe,